Hello, everyone. Thank you for joining us this morning or tonight, wherever you are in the world. Today, as you know, we've had Roshan on before from Equal 8 Finance, and we've had a few interesting things come up from our last discussion, Roshan. We got such a great response from that interview or chat that we had last time that it's great that, you know, you want to come back on and you want to actually go through other things. You were mentioning to me that like last time when we were talking about valuations and how important it is, and the difference between what my take was, how the bank, they get a valuer in, and if that valuation comes down low or doesn't suit what the client needs to be able to get that money, then the process is really, really long, and the client could actually miss the opportunity of a house or a property that they're looking for. And you were saying that if they went to someone like yourself, a broker, that what happens there is that you've got the ability to scan out to a lot of people. So if one valuation doesn't come in, you can readdress it and there's more opportunity. Would that be correct?
Yeah, that's exactly right. So well, one of the takes that I can't see right now is just really the valuation coming in lower than expected from the purchase price, even though it's being bought from auction as well. It's still coming in lower. So yeah, our brokers, they're a bit more flexible because obviously we can shop around with different banks to see which one's going to, provide us with the best valuation for the clients, as well as the best rates, and that's more suited for the clients. But yeah, I just wanted to give you an example. That's why I wanted to sort of bring this up, because last week I had a client who bought a property, and basically the purchase price was at $500,000. Now, in terms of their savings, they only had about $30,000 in savings. They're first home buyers, so in terms of the stamp duty, that's going to get waived off based on the first home owners grant. And I just want to emphasize how important the valuation part of it is because in terms of the loan amount, we're looking at, sorry, excuse my baby, by the way, he's just in the background on the way to Disney on Ice.
That's all right. Yep, that's good.
Yeah. So in terms of the loan amount, we were after about 474. So from a purchase price of 500,000, and again 30,000 for the savings. So effectively, we wanted 26,000, which is just a little bit over 5% as a deposit. $2,000 worth of costs, and another 2,000 for new furniture from Fantastic Furniture as a package. All up making about 30,000. So in terms of the valuation actually came in at 480,000. So effectively, what that means is that we go over the 100% lending, which is a very no territory for the bank. We're going to think as we have to pay for what's called the mortgage insurance. So let me just break it down again. 500,000 as a purchase price, $30,000 as a savings. The loan amount will be 474 because we have 4,000 in just other cost. The mortgage insurance is roughly about 15,000 based on that. So effectively, the loan will be 474 plus the 15,000 mortgage insurance, making it 489,000, and effectively that's a 98% lending, which only some banks, not all banks can actually do. So we sort of narrowed down the niche market on what we can target, and in order to help out this customer.
Yep.
So the valuation came in at.
Oh, we've lost Rosh temporarily. Hopefully he'll try to get back on again. Yep, I think he is. We'll just stay with me because it's actually really interesting what Rosh is saying here about the fact of. Hello, you back on, Rosh? We got you. Are you with us? Going over these figures like Rosh is doing at the moment of the 500,000 and the 30,000 saving. For starters, it's telling people what they need to save. But this is where, talking about the other 4,000. Come back in as soon as you want, Rosh. Just interrupt me and go for it. Have you got me? No, still got a bit of a breakdown there. Just wondering if he can hear me or not. But anyway, and then the 15,000 of mortgage insurance, and I'm not sure. Hi, Rosh, you with me? 15,000 with mortgage insurance, and it's very interesting that we actually also put in the other 4,000, which was 2,000 for costs and things, and 2,000 for furniture you want to buy, whether you buy from Fantastic Furniture or wherever you choose is your business. But the thing is that it's these little incidences when you buy a new home is probably what you forget, or you're so excited about that purchase price or the ability to be able to get that these other little costs is something that we don't always remember. Are you with us now, Rosh?
Yeah, I'm so sorry about that.
That's okay. I've just done a rundown with those figures again that you've told me. So I've just explained again those figures, and I'll put it up later after we do this interview today, this chat. So you're up to the point that's a 98% lending, which is a no-no to a lot of the banks. So go from there.
That's exactly right. So we've got to basically 98% lending. There's only about less than 5 banks that would actually do it, and obviously those banks itself aren't going to be offering the best rates. So we want to make sure that the clients are looked after on it. So because the valuation came in at 480,000, I guess a few things that we could do from then onwards. Where the first thing we actually ask for is we speak to the clients to see if they can get another 20,000 in terms of like a shortfall fund. So either their parents can help out. Or if they got any, money under the bed. The second thing is obviously we tell the clients to speak to the agents just to see if, I guess they can negotiate the price further. The thirdly is basically if get permission from the clients itself and, to speak to the agents and I guess get a sales report from the agents, which is exactly what I did. We had to contest the valuation, so we had to prove that the 500,000 was obviously is the sale price of it. So contesting the valuation by providing comparable sales, which we normally get from the agent, or we can just do our own Google research. That's what the valuers actually do. They just compare it with what's recently sold around the area that's comparable to it, but at times they can't find the exact same one. So they look at something from the next suburb that's a little bit sort of smaller, and then they adjust the price from then onwards. Luckily enough, with this particular situation, we didn't have the valuer actually agreed to the price that we contested it for, making it a contract price. So that was quite lucky. I mean, obviously there's a circumstances where if they still did do that, we'll go to a different bank. But obviously the one thing that we have to consider is obviously the interest rate's going to be different, the fee structure, and it might not be the best suited for the client. And another advice is obviously if we go to a second bank and we get a different valuation to it, and the valuation comes in low, I guess it's a good hard talk with the client to say, look, I think we should really pull out from this sale because it's not going to be more feasible for you. Because the last thing you want to do is be ripped off by buying something that's overpriced.
Yeah, and unfortunately what happens with these purchases, and I mean you can tell me here that the purchase is by the emotions usually, that would be a large percentage of it rather than investors who would know to go for the cheaper. But having the emotions, that would make it so hard, and it would put up stress values and everything. Do you see a lot of your clients stressing out over these things?
Definitely, yeah, that's a very good factor to it. A lot of and also when you said the emotion part of things, when I was at that auction when they actually did it, and it was at 489,000 at that time. The agents was going up by 1,000, and then from 495 it started going up by $500. And the agents, the auctioneer actually said to the buyer, another $500 is only going to be less than $1 in terms of repayment on your mortgage. Which is quite. And when you think of it that way, emotion plays in. Do I have to go through the process of looking for a loan again? Of a home again, and doing a building inspection and everything else. Mind you, by the way, this particular property was actually in the Central Coast. The prices are a little bit more, reasonable out there, and a little bit more attractive, I guess. And hence why a lot of people from Sydney is actually just going out there.
Yeah. But the thing is that what happens there, and you're like what we're talking about is the emotion behind the purchasing of the house at an auction. I mean, those auctioneers, they are trained to do that because that's what their job is. They're to encourage the sale to go up. And even if they've got it going up in $500,000. Hang on. $5,000 increments, or whatever increments whatever increment it is, the smaller it is. The trouble is being the people that at the auction, you get caught in auction fever, which we may even have a talk to Paul Gretsch about that, who I had a talk with the other day, who's also an auctioneer and marriage celebrant. And the thing is that when you're caught in that fever and it's going up in those small increments, before you know it, you've gone up $10,000 and you don't realise it. And it's the problem, isn't it?
That's exactly right. Yeah.
So in that case of people going to auctions, it's a lot of them would see you beforehand when they know exactly what they can and can't go to. Do they do that with you, Rosh?
Yeah, a lot of times they do. So, but there's processing depending on which bank we go with, right? So, for example, and especially nowadays, if the property is going to auction, the banks aren't actually able to do a valuation up until the time they get a contract price or an offer and acceptance. So there's ways around to getting that valuation beforehand, but it comes down to which bank it is. But now, I guess the more importantly is actually just getting their pre-approval beforehand, just to make sure that they can actually afford the repayments, they can actually borrow that much, and majority of times it's just going to be subject to the valuation of the property.
So the thing is, as you said then, that they can't actually give a valuation until they've got a contract. The banks, this is. So therefore, you have to go around it another way. So is that particularly like another sort of tick in the box of why they should go to someone like you who can look outside the square and move around or know how to move around to get those valuations, so that when someone's at an auction, they aren't really buying or purchasing blindly? Would that be correct?
That's exactly right, yes. So it definitely is an advantage to go through a broker like myself, just because we've got that flexibility to be able to do things like that.
So in that case of when you get people buying from auction versus people that are buying not from auction, do you find that the values of homes that are going at the moment in Sydney, because I think last time we spoke, we talked about how the prices are dropping in the Sydney area, do you think they're coming more realistic to what valuations are?
You're talking about the drop itself. Is it more realistic to the valuation price, or?
Well, yeah, I am. I'm saying that like when it was up higher, a lot of people are obviously who are selling are trying to get their top dollar. I mean, that's their job. That's what they want as a seller, you do. And as a buyer, you want to get as low as possible. That's the way the game's played. But, I mean, when the prices are dropping in Sydney, and I think that's what we mentioned, does that mean they're coming more within the true value of the property?
Not necessarily. Like, I mean, with the valuer itself, I guess they got to do their own research when it comes down to it. But like, just to sort of emphasize, like majority of auctions sold property is actually at market value.
Right.
It's normally the case. Because obviously, you've got, let's just say, 10 people registering in the property. You've got 3 people that are bidding. That's what the market value is. But at times, the valuers don't see that because obviously they're not at the auction itself. They just think that someone overpaid for it just because of emotion. But if you're asking in terms of the price now, is it reflecting the actual valuer's point of view? It doesn't actually, because even though the agent's selling it at a lower price, the valuation is still coming in lower than expected. And this is why it's really sort of with buying to auction. And that's I guess that's part of the reasons why the auction clearance is quite low, because the buyer's confidence isn't actually because everything you got to be subject to that valuation, and that plays a big part. Because if you're unsure of the bank's actually going to value it at that price, I'd rather negotiate after the auction.
Yeah.
96W, which waives your cooling off period, right?
Yep.
What it means is that effectively your 10% deposit that you put down, or however much it is that you negotiated on, you'd have to forfeit it.
Yeah. So you went in a little bit there, but what I heard from you that I found interesting, I'm not sure if everyone else will, but let's put it out there, is that you said that if you get, say, 10 people at an auction that register and only 3 are bidding, that's a reflection of the price. So it comes back to the thing, or what is said when people try to sell anything, that it's worth what people are willing to pay for. So therefore the auctions are a more realistic value, and that's what you're saying, of the reflection of what the valuation of those properties are.
That's exactly right. And that was one of the reasons that it was quite easy to contest the valuation that I had last week, due to the fact that obviously it's an auction condition price. And, you know, there was numerous people that was actually bidding to it up to $500 increments. You know, so it was more favorable. It kind of made sense to just, you know, for the valuer to change his price over to the price range, to the price that it actually sold for.
Yeah. Well, okay then. So, I mean, that's really great. We've got a thing about auctions. We've learnt today that if you're going to an auction and you see, say, 10 or whatever people registered, or 20, but there's only so many bidding on it, for anyone in that auction who's interested can realise now that the value is there. That's what the value is. So whether they get caught up emotionally in it or not is another thing altogether. But again, when I think about that, looking at it from a mental health perspective, of people that stress about it and really want it, and, you know, all those adrenaline that goes of, oh my God, my first home, I'm so excited, rah, 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 that if there's only 3 people bidding on it, or 2 or 4 people, at the end of the day, it's really not going to go further, because people are going to pull out, aren't they? They're not like they're in that rush that was in Sydney, I think, a while ago, where so many people were bidding and they were pushing prices of auctions up. Is that correct?
That's exactly right. Like, I mean, at the end of the day, like, you know, what we normally tell our buyers, you know, just to avoid that stress, is that, you know, we come in there with a price range that we want to pay for. And, you know, any cent more than that, we try to avoid.
Yeah. So,
you know, 500 here and there just keeps on going up.
Yeah. Okay. So, your purchaser, the person that came to you to get the loan, he was happy in the end?
Yeah, they're quite happy, actually. Yeah, family of them. It's one of those things that I guess it's quite rewarding. And, you know, come to think as well, like, you know, when they put down that deposit, that 5% deposit, that's there's no way of getting out of that, because they've already signed the contract of sale. So it's just a matter of making sure that the banks actually were able to help them out, which in this case they did.
Yeah. So you had a happy ending on that one. So very good to them. And are they a young family with kids? And
young family. Yeah, one kid, actually.
Right, their first home, or?
Yeah, it's their first home. So they're entitled to the first home owner's stamp duty waiver, not the first home owner's grant, because it wasn't brand new.
Okay, so with the grant, that's only for new places, whereas on the other side, you get that waiver of the stamp duty.
Yeah, that's exactly right. For anything under, I think it's like 600,000 or 600,000.
Right. So how much did they save with the waiver of the stamp duty?
On that one, it is about 18,000, give or take.
Well, see, that's really good, isn't it, when you think about it? I mean, how much is the first homeowner's grant?
It's 10,000 for the first homeowner's grant. But realistically, you know, 500,000, there's nothing to buy brand new for it. Yeah.
Well, no, okay, yeah, I get you on that. There's not. But, I mean, for people that are even just trying to get into the market, when they get that waiver of $17,000, and you think about it, you've got as you mentioned down here, $15,000 sometimes insurance, mortgage insurance that you have to pay. That actually counteracts it, doesn't it?
Which insurance do you $1,000 in savings? Sorry, what's that?
What I'm saying is, if they get, say, $17,000 in the mortgage, in the waiver of the stamp duty, does the mortgage insurance that do they have to pay mortgage insurance for everything, Roshan, or is it only in some situations?
It's basically anything over 80% lending. Right. They have to pay mortgage insurance unless you're like a specialist, for example, like a doctor. You know, there's some sort of like a medical sector where it goes up to 90% without mortgage insurance. Right.
So the key here is to people out there watching us today and will watch this later, is if you're going to auctions and there's a lot of people registered, actually count how many people are bidding on it, because that will give you your true market value. The other thing is try and keep under the 80%, because if you do and you get that waiver of being under the 500 or whatever that waiver is there, you actually get as near $17,000 savings, which is great. And if they stay under that 80%, then they won't be probably subject to that mortgage insurance as well.
That's exactly right. Yeah. So if just with the cap lending would be 95%, let's say 94% plus the mortgage insurance on top. So making it effectively at a very most 98%, lending. And yes, obviously if they've got 20% deposit, then they won't have to pay mortgage insurance. But something to be mindful of is obviously if they go over that $600,000 mark, or if they're buying something over $750,000, stamp duty may be payable, but your solicitor will be able to advise you on that as well.
Okay then. All right then. Well, look, thank you very much. I know that you're having a day out with your family and you're seeing Disney on Ice, and I think that's absolutely great that you could take the time out, Roshan, and be able to go over this with people that I know that will be really interested in this. Maybe we can have a chance of catch up maybe in a week or two and have a look at some other scenarios that you come across and, help people sort of get their mind around it. And everyone, look, you can contact either myself or Roshan. I'll send any messages through to Roshan. I'll put up your email address and all your contacts. Thank you very much. Have a lovely day with your family, and I'll chat to you later, and thank you everyone for listening. Ta-da.
Thank you so much. Bye.
Bye.